And if you combine the turnover year to date from the year 2010, you see that there was a trading of 1.66 billion euro. So double the trading volume of Ljubljana, but only approximately 1/10 of Prague. Meaning even if you combine all the markets, you have to put in a lot of efforts to be in the focus of the international investors again. But it can be done quite easily. What is the problem currently? You have some sort of vicious circle. Vicious circle meaning that you have a decreasing market capitalization as well, decreasing trading volumes. Therefore, investors are less willing to invest in their home country. They are more looking to the international markets where we find the liquidity we are looking for. Which leads again that the companies who would like to access capital can be easily attracted by larger exchanges, because they can provide them the liquidity pool they need. But if you operate an exchange based on the home market principle with a strong international partner, then the liquidity pool will be in the home market, not outside of the market. Meaning that your current trading routines can still be in place and you use the same channels as now, but based on higher volumes, higher market liquidity. And of course, capital market infrastructure is still under development. In most of the countries, a clear CCP is missing, as example. Now, how to break the vicious circle and create the critical mass and liquidity needed? And I think here can only be one answer, even if it's a very complex and difficult one. You have to team up. Now, what are the alternatives for teaming up? If the Southeast European exchanges join forces, there can be built up something like a SEE market linkage, meaning that each of the markets implements an electronic link to each other's without losing its own identity, without changing its ownership structure, and allowing the trading members of your exchange to trade on all the markets via order routing. That means you even do not fragment the order books, and you create higher liquidity pools because the investing community becomes larger. You may now ask, didn't it work anywhere? Wouldn't we not be the first who tried? The good and positive example is here that in the Asian countries, they already are in the process of building up the ASEAN trading link, which will come operative at the end of this year already. And also here you have different legal systems, you have different infrastructure in place, you don't have harmonized markets up to now. And here 4 countries joined forces to provide an order routing facility to their trading members, as well as the appropriate linkage between the back office operators, the CSDs and CCPs, as far as they are existing. And also different currencies are a problem in this case. Then, of course, you can form this Southeast European Stock Exchange Group with a joint entity under one legal umbrella. But having discussions with the regional exchanges here, I would say that would be the optimum, but it's not realistic. You have one country which has already implemented a Capital Market Act which is similar or the same like the MiFID directive in the European Union, and then you find different legal acts in the countries. So it will be very, very difficult to harmonize the markets under a regulatory as well as legal perspective. Also, the willingness to combine is given, But if you ask the second question, where should it be located, you will hear 6 different capitals. And as long as you don't find a neutral oil platform out of the sea, it will never happen in the near future. So it seems that the loose alliance is much more feasible. What would be the third alternative? Of course, to join forces with one of a major regional player. That means sharing IT infrastructure, sharing strategic development efforts, sharing costs and turnover. But to be attractive for one of the major players, you have to build up your market, or you have to show the perspectives of a market. And the perspectives are here in Macedonia. It's just a way how to present it, and of course, it's as complex as the regional exchange hub, at least at the beginning. Now, is it time for a regional market? Yes, it is. But it's not feasible to have a merged Southeastern European stock exchange in place based on the protective mechanism in place in some of the countries here, and also the location decision will be one of the major ones. But what can a market link bring to you? It will bring to you as exchange member one connection and access to various markets, to various market instruments. It will help you to trade instruments on the connected exchanges via order routing, which is also quite a cost-effective solution, because you also don't have to change your back office systems. What also should be done is calculation of a regional index, an investable regional index, which makes it possible for portfolio investors to replicate the portfolio and to invest directly in the markets here. And of course, a linkage of the clearing and settlement systems of the regional markets. But here are various examples existing, how to do it, and what are the costs associated with it. If there is the decision to go for a regional exchange hub, of course, then trading of derivatives instruments should be done on a regional exchange level, because we conducted in the region 2 feasibility studies in 2 countries if it's possible to implement currently a derivatives market. Fact is that the base liquidity is not very favorable now to implement a derivatives market on single country level. But if you implement a derivatives market which covers specific regional stocks and instruments, then it can be very, very successful. And it will offer also your investors a hedging instrument. Advantages for the Macedonian Stock Exchange trading members, of course, will be that same costs like now, but access to more markets and additional income streams, which I think is quite important under the current times. But of course, you have to have in mind that it's not a thing which can be done within 1 year. The ASEAN Link market took up to now 3 years to come to life, because it's a question how to finance it, how to implement it, who should implement it. Here you see in graphical form the order routing system which would be in place. That means the member of exchange A, here in this case I took Zagreb Stock Exchange, will put into the system of Zagreb Stock Exchange his order. It would be put forward for a Macedonian stock, it would be put forward through the order routing system into the order book of Macedonian Stock Exchange. Here the trade will be matched, the information will go back to Zagreb Stock Exchange for the Croatian participant and will stay at MSE for Macedonian market participants, and on the same time in the CSD, each of the CSD will have an own account in the CSD of a partner country, and that means clearing, settlement, everything will be done by Macedonian Stock Exchange, but the information will be put back to Zagreb Stock Exchange, really helping to increase market liquidity in both exchanges, because vice versa, it would also be possible for a Macedonian market participants to place an order for a Croatian stock. Up to now, everybody told me it's not possible. Different legal system, forget it. That's not really the problem. The problem here is that you have on one hand the public law, which may segregate the market as you see it here, or in another under another model, but everything can be overcome by private law. If you say, okay, if you're traded in the order routing system, then we have our own segment 1, our own segment 2, and on our own segment 3, a contract, private law contract, which is signed with the listed companies and the trading members. That is how to overcome the hurdles in this area. So, my personal opinion is that most of the trading members in all of the countries are looking forward to such a solution. Problem currently is different legal and regulatory systems in place, which hinders on one hand to build up a common marketplace, and at the same time there is also not the political willingness in one of the countries to accept that the headquarters will be outside, which is really also a difficulty because an exchange has also a macroeconomic function to fulfill in the country, because it provides risk capital to the local companies normally, and local companies are mostly known in their home country. We have seen many cases where medium and smaller sized companies are listed outside of their home country, but didn't find the interest of the investors because nobody knew what is behind the brand name. So it seems currently feasible that only an exchange linkage is possible, or that you join forces with an international regional player. Thank you very much.
Hi, I'm from the Federation of Eurasian Stock Exchanges, and apart from the order routing and all the IPO processes, what we see in our member exchanges is that they're very eager to make their country a financial center of the region. So we see that in Kazakhstan Stock Exchange, we see that in Istanbul Stock Exchange. So do you think it's a primary obligation to attract foreign investors, especially for mergers and acquisitions, to be a financial center? And what do you think about this for the CEE region? Thank you.
So if you ask me how many times I've seen financial hubs, then I would say around 12 times. The last one is Casablanca, which would like to be a regional hub for North Africa. But definitively what you need is international remote members in addition to the local members, but that doesn't mean that you have to become a regional financial center. That means only that you have the systems in place which allows market participants to access the market wherever they are located. But that means also a change in the legal and regulatory system. Example is Vienna, where we see that the international foreign remote members increased the volumes by 67%. And on the other hand, the whole cake increased. That means also the local members are making now more money than they did before, because the trading volumes increased dramatically. So that means connecting international remote members does not mean that it's a real threat for the local members. It really helps to improve liquidity. Thank you.